G'day folks, welcome back to another weekly update for the 10th of April, and we had generally pretty strong market conditions last week. Ended a little bit weakly on Friday night with this impasse in the US government about the budget, and as a result the S&P dropped a little bit on the night, but I understand that there's been some resolution of that over the weekend, so we should see the S&P and sentiment bounce back on Monday morning. So let's have a look at some of the bigger picture issues. Just before we do, just a reminder that this is general advice only. It is not trading advice. You do need to consider your own circumstances before taking any action against anything that's recommended here. These are purely my views. So let's have a look at some of the action. The S&P was lower because of this budget situation, but as I indicated, we will see a rebound, I would expect, on Monday morning. But the consequence on the night, and of course the bigger picture, is that the US dollar continues to get smashed, and we'll have a look at that chart in a minute. And one of the issues about these very big currency distortions is that they do cause major changes over time. Now, at the moment, the stock market is pretty much running along as normal, and I think there will be some positive or continued positive outcomes from this weakness in the US dollar. One of which, of course, is higher commodity prices, which is going to be good for us. But there will be unintended consequences if the US dollar continues to fall at this rate. Because eventually it causes such distortions that there is a flight away from riskier assets such as stocks and into less risky assets such as fixed interest. My only problem with that is the people that are going into fixed interest are effectively getting no return on their capital at a time of increasing inflation, so they're virtually guaranteeing a loss situation, whereas at least in the equities market, if you're aware of what you're doing, you can get out of the way, and then you can make up some very good capital gain on the rebound. So for me, the equities market offers a much better alternative. So Aussie indexes, I would expect, will probably push higher on Monday, although you never can tell how markets react to things. Gold did break higher, as I foreshadowed last week. It just really had that appearance about it. It was building up a pattern underneath resistance that looked like it was going to break out, and it did break out with a lot of force and quickly ran about $40 higher last week. Silver still moving ahead and is heading towards $41 at the moment. Copper was strong again due to the significantly lower US dollar. Oil gained another 4.4% on the week, so we'll have a look at the oil chart. That's not causing a disruption to the stock market at the moment, but I can see that maybe coming if it continues on its current path. The Small Ordinaries Index still strong, threatening new highs. So certainly the small cap sector of the market is still one where there's a lot of benefit to be gained. And the Aussie dollar is closing in on 106. It was only a week ago, I think it was 102. So we've gained about 4% this week, which is extraordinary. So let's have a look at some charts, and we'll start with the US dollar. And you can see big picture here. The US dollar is in very big picture downtrend. Zooming in a little closer, you can see we had an inclined support line through here which got broken. We'd maintained it on 1, 2, 3, 4 occasions, but it broke down recently, and we're heading lower now. I would suspect that we're heading down here to 71, which is the all-time lows that we saw at the bottom of the crash in 2008. So the US dollar really looking very sick, and if it gets down to that level, then I think we'll certainly see the Aussie at about 110. So you can see major move on Friday night. So that's certainly a theme that's continuing to dominate global markets. Let's take a look at the actual S&P 500 index. This is the monthly chart. So you can see we did have a bit of a dip in the month of March, which was as a result of the situation in Japan, but very little movement so far in the month of April. But you can see it's still strongly higher. We might be getting just a little bit of a pause this month, but the S&P is still looking very good. So that's on a monthly chart. Let's just have a look on a weekly chart. So still very strong uptrend, the 150-day moving very, very strongly, the 50 well above it, maintaining that gap, and the price is above both of them, so there is just absolutely no question about the trend. We're getting up close to a double top, but I really think that we may see that break. It may push just a little bit higher and spend maybe a few days or possibly even a week or two around about this level. But I really think we're going to push higher in the not too distant future. So that was the action on Friday night. Let's take a look at our market. So this is the ASX 200, and this is on a daily chart. So we finished very strongly on Friday. We're basically right at these highs from the 17th of February. Let's just pan back and look at the bigger picture. So we've got some resistance up here at the moment at 5,000 points. So you can see we're certainly getting close to that. We are overbought in the short term, so I wouldn't be surprised to see us push up a little bit higher and then perhaps consolidate that move. Let's have a look now at what has been the strongest sector. So this is the energy index, and we're looking at this on a weekly basis. So energy was as high as 20,000 points in July of 08. We've been banging up against this level around about 17,000 for a little while now, but finally broke through it a couple of weeks ago. You can see very strong volumes coming in, so energy definitely broken out of that trading range that it was in over the last year or so, and pushed strongly higher. Part of that is takeover speculation surrounding Woodside is certainly pushing the index up. Let's look at banking and finance. This is a daily chart. Let's have a look at it on a weekly chart. So you can see very strong in the last couple of weeks, but really bigger picture, the banking index has really done nothing. It's just gone sideways since August of 2009, so it's 18 months, nearly 20 months of just nothingness. So certainly, unless that's going to start to get into a new uptrend, which it's not showing any signs of at the moment, the banking index is not one that I'd want to be playing. So this is a daily chart on the materials index. You can see that we have basically broken above these highs through the week. So broke those highs through the week and heading higher. Let's look at this on a weekly. So you can see weekly chart, we've got an all-time high in 2008 of about 17,000 points. Extremely strong uptrend. We've now broken to new highs. So wouldn't be surprised to see this push on, and if this index does push on to 17,000, then we are going to see certainly a break of the 5,000 mark on the ASX 200 in a major way. Let's look at the small ordinaries index. So this is the comparison. This is the small ordinaries against the ASX 200 over the last. It's basically from 2009, so this is the last 2 years. So you can see the ASX 200 largely gone sideways since about September 09, and that's largely a result of what's happened with the banks. But you can see the small ordinaries index has really outperformed, and it's really opened up a big gap, so that's definitely the place to be. Let's just have a look on a daily basis. These are the all-time highs that were formed. We had a triple top formed in January and February. So we're coming up now to test that triple top for the fourth time. The way things are going and the way this trend is looking, I'm really expecting this to push through and break to new highs above 3,000. Let's have a look at gold. So you can see gold, here's where we were last week, just butting up against this 1440 area. We broke through it with a great deal of momentum and closed on the highs up at 1475, so extremely strong week for gold now that we've had that breakout, and you can see that pushing on a little bit higher. And here's silver. Silver closed the week at $40.61 and really is not showing any signs of weakening at this stage. Again, closed on its highs, and so precious metals just really powering ahead. So let's go back and just have a look at a few of the other commodities. So first of all, this is copper. This is the inventory level, the 1 year inventory level on the London Metals Exchange warehouse. So you can see copper inventories were building, but they're starting to plateau out again, and I saw some reported comments during the week from the chief executive of Rio Tinto that he's expecting the global copper market supply to be in deficit to the tune of about 500,000 tonnes a year, and that situation could last into 2013 or even beyond. So the supply and demand dynamics around copper are extremely strong, and as well, while copper is moving up, then the world economy and stock markets are going to be fairly strong. So this is the actual copper price. You can see just in the last week there, right at the end, the copper price did turn back up again, and I wouldn't be surprised to see copper break to a new high in the next couple of weeks. This is the nickel inventory. You can see we did start to get a build up again of nickel stocks, but it's really turned down again now quite strongly. So nickel stock's being drawn down, which means that it's being consumed. And as a result, the nickel price still continues to work its way higher, particularly in the last week. And now we're back up to about $12.40 a pound, which makes most nickel producers extremely profitable at that level. This is a look at the 4-year tin price chart, and tin continued to do extremely well. This chart maybe not quite up to date, but I know that tin did move quite strongly on Friday night. So just as a summary of the way that I think you should be working your trading at the moment, pushing towards 90% of maximum exposure I think is appropriate, but just be mindful of the possible change dates that I've written about in the daily alerts for members. There are some key dates coming up, and so I'm going to be watching the market very closely for signs that we should perhaps back off our exposure. So the strategy, we're still looking for quality resource projects and emerging projects. It's where the money is, where the takeover activity is. Energy stocks are the strongest sector. It's hard to buy them at the moment, the majors, because they really are very expensive, but it doesn't mean they can't move higher. So from a trading point of view, it's energy that is going higher. The large resource stocks have recovered extremely well in the last few weeks since the situation in Japan, and most of them are now back trading at the levels they were in February. And I'm still looking to short sell the retailers, so if our market continues higher for the next few weeks and takes the retailers with it, then to me that's just creating better and better opportunities for short selling the retailers. So that's the summary at the moment. For members, there will obviously be the detailed weekly chart updates and also the daily alerts tables as well. So that's it for now. Talk to you next week. Cheers.